Now, the government has invited Kenyans to present their views on the country's budget as it embarks on drawing up expenditure estimates for the 2019 to 2020 financial year. The public hearing is set to include all sectors of the economy and industry players, including views from the Commission on Revenue Allocation, County Government and Controller of Budget, the Parliamentary Service Commission, the Judicial Service Commission, and any other interested persons or groups. We are now joined by Senior Research Analyst Churchill Ogutu from Genghis Capital. Thank you very much for joining us this afternoon. Now, we saw 2018 to 2019 budget was heavily dated. What other alternatives can we put in place to ensure that this year, this financial year, that is 2019 to 2020, we do not incur debt that much, that is to say?
Thank you, Sarah, for your question. I think for the current financial year, there are significant debt maturities that are due. First one, there's a syndicated loan which is due at the end of the first quarter, around March 2019. And then there's the Eurobond 5-year tenor, which is due at the end of the second quarter, around June. Both of them are around 78 billion Kenya shillings equivalent. What even the policymakers should do is to ensure that most of this, because what speaks to us currently is the issue about the refinancing risk, because these two bonds are coming more or less at the same time. So the policymakers should ensure that those bonds are sort of spread out across the curve, such that it doesn't have an impact within a single financial year. We've seen even within the medium-term debt strategy by the National Treasury, even in the local debt, there's that issuance of the long-term debt, so as to be able to avert this refinancing risk. So I think even when it comes to the external front, we're likely to see extension of most of this debt so as to be able to avert the refinancing risk. Okay, and still speaking matters on debt, the standard gauge railway is heavily debted. What are we going to do to ensure, going forward, projects that the government is taking place, like is ensuring that we are going to take place in, do not ensure that we do not, they don't continue to make us get into debt, yes? I think the presidential directive that came out around July last year on the new capital expenditure projects, which were brought to a halt pending the ongoing projects, is one of the key factors that will determine that even going forward, projects are completed, and also for the new projects, there'll be a bit of higher scrutiny to ensure that the high valuable projects are the ones which are now put in place by even the respective ministries, departments, and agencies. We are also looking at even the National Treasury, the last two budget statements. They have said that now most of these ministries, departments, and agencies are starting at a zero budget in terms of zero-based budgeting, in terms of coming up with their respective budgets for the financial year. So that ensures that the projects which will come on board to be financed are the ones which are really high quality, which will now at least ensure that going forward, most of these projects that are being financed even by debt have undergone some solid feasibility tests, and they are able to test even their respective profits going forward. How can we increase the country's assets, just to say that? Well, it's a number of things that we need to look at in terms of speaking about even the revenues that we have to bring on board. Looking at even the last 3 financial years, we've seen that even the National Treasury has not been able to meet its revenue target. That speaks of the assets that we have and what return that we are able to generate from those assets, be it the human capital as a country, which now brings the income tax aspect of the revenue collection, and also some of the drivers that we have during the international trades that we have with other countries. So it's a bit of ensuring that the policymakers come on board And really back to the point addressed, looking at the high priority projects which will now be able to generate returns so as to be able to at least have the revenue targets being hit in each and every financial year.
Okay, and then what are some of the sectors that we can tap in as a country to ensure we get good returns in later?
Well, I'm looking at sectors like the energy sector, which is a big enabler in other different sectors. So if you can now be able to steer financing towards those sectors, which will now be able to somehow give steam to the other subsectors, it will be a big plus to the economy. Another one is on the manufacturing. If you look at even the exports that we take abroad, those are now at the lower end of it. They are basically raw materials which we export, and then we return them, we import them back as finished products. So there's that element of value add that has to be captured going forward. So I think the big four agenda item of manufacturing, which is now the value addition, if it's correct, if it's followed through to the letter, and then they look at the different subsectors, we're likely to see a bit of most of these sectors generating the revenues that are needed. Yeah. Okay,
and as a country, we've been relying on agriculture sector for the longest time. Other sectors probably, other than agriculture, in terms of diversification of the country's economy as a whole?
I think what started even last year, blue economy, I think it's uncharted territories that we are looking at. I can look at it as a subsector of manufacturing and also, manufacturing. So it's something that it's still yet to be tapped. So there's still some efforts for us to get into that area. But nonetheless, ICT is a key sector in the economy, which we can now be able to scale up. Different innovations have come up from Kenya, which we can take ownership to it. So there's more to be developed in this subsector, in the ICT sector, which will now be able to steer us forward. Yeah.
Okay, and speaking of the big four, yes, let me take you back a little bit. The big four, we've seen the teachers the other day complaining about the housing fund. Yes, what's your take on this? Do you think that going forward it will actually work?
The purpose of it is good because they want to ensure that there are low social cost housing across the board, that every Kenyan can now be able to access housing. But the challenge now comes in is now that issue about the statutory deduction, the 1.5% from as an employee and also an employer coming in. So that's where the whole hulabaloo has come about, that, okay, my money is being deducted, but I don't see housing as a need to me. So there's that element of, okay, there was not public participation prior to that housing levy being brought to place. Hence, we are seeing even the NAT, we've seen even Ogutu coming in and has been challenged in courts. So right now, it has been suspended till waiting further directives around it here. My thinking is that the need, that purpose is there, but not all Kenyans require housing as a need. So I think it's something to be thought about here.
Okay. And with the public hearing set to commence, what priorities do you think should be put in place for 2019 to 2020?
Yeah, I think it's a plus for the National Treasury. This public hearing is even started around December when the public were called to give their views. I remember when the last fiscal budget cycle came around, one of the things that really came out that there was no public hearing. Hence, we saw all that whole protracted legislation process before you got the Finance Act into fruition. This time around, there's that element of public hearings, and also is going forward even with this draft public budget policy statement till 25th of January. I think the views will be diverse. There won't be any commonality in terms of the views, but I think there'll be different people coming in to voice their concerns or their expectations or optimism. So I think it's a good that people are being brought to the table to discuss the whole budget process.
Thank you very much for your time this afternoon. That is Churchill Ogutu, Senior Research Analyst at Genghis Capital, and he's been able to talk about the draft budget policy.